effectively, OrdinalsBot was in the quite nice position that basically we had like pretty strong product market fit from day one. And I think I'm having like probably been like on the founding team of about 5+ startups and seen a lot invested in quite a few of them. It was interesting to me to sort of talk through what is an investment worthy startup. I've been kind of very much on the entrepreneurial side of the fence for a long time, like years. And so you'll meet VCs and especially pre-token, that basically the answer you'll get is to get to 1 million annual recurring revenue, which is really interesting, not particularly helpful when you're sitting kind of ideating on what your idea is and where it is. But I think it is it's probably worth knowing that in VC land, there's kind of a rule of thumb that the startups that you chuck money at have 1 million annual recurring revenue because they're scalable. You can deploy. They've been proven in what they can do. But clearly, I think the reality is that you're always kind of standing at the bottom of the hill to how you get there, right? Like a lot of anyone who's been an entrepreneur has fought to get like 5K revenue in a month, 10K revenue in a month, like very small numbers. And obviously I think there's a pathway to it, and we all know, right? Like we've read about the Airbnb founders or whatever, and there's some very good articles on how they sold like a cereal packet at like South by Southwest with Obama on the front to keep Airbnb alive, and then managed to pitch an investor round and got the thing scaling. But I think I guess it's probably worth going to like probably the most famous entrepreneur of Web3 and early internet, Mark Andreessen, who's also quite a renowned VC, and he's got quite a good article on is it the team, is it the market, is it the product that are the most likely things that will make a startup successful. And Andreessen, as you can read, says basically in his view it's market much more than product or team that matters. So the good news is by taking Albert's class and picking Bitcoin innovation, you're probably in at least giving yourself a bit of an edge by going after a new gold rush. We've got ordinals, some of the promising things in Bitcoin DeFi. I think it's definitely a period of innovation in the Bitcoin world at the moment, and I think Bitcoin as a narrative with the even with the sort of financial market ETFs of the BlackRocks and Fidelities and the like, it's probably you can like with my financial markets crystal ball in front of me, you can easily imagine there being another Bitcoin bull run fairly soon, right? We've got the halving next year. We've got all these conditions for innovation, and no matter what bad news seems to come out, Bitcoin is still above 30K, right? So interesting times from a market point of view. But then of course you need a talented team, a differentiated idea, an understanding of your target market, consistent execution, the ability to understand that. And I think I'll obviously send round that, but I think as you're putting together your pitch decks, as you're testing your market thesis, I think like the first thing anyone like I'm assuming most of you are pre-seed teams, or at least like coming to seed. The reality is the team will be as well as what you're communicating. I think it is critical. Like you need to be very clear of who you're surrounding yourselves with, and have a team that can execute on what you're doing. And then a lot of people will believe into that. But I mean, also, I think people have to be quite open-minded about how you assess that. But like I think the way you become a good team is almost being super professional, having each other's back, wanting to fight for as much success as possible. And I know from every startup I've ever been in that everything under the hood is probably chaos, right? And it's almost like being the thoughtful people that people can buy into, that they can trust and go, look, we fit together like this. Like we've got this great tech guy, we've got this great marketer, we've thought about the strategy like this. And the reality is no founding team at this scale will have all the bases covered, but you'll have some of them in spades, and you should double down on that, right? And I think if you've got strong Bitcoin crypto credentials, obviously I think that will be helpful, especially on the programming side for this market. But then I think if you're the skilled marketer or business thinker who's able to think adjacently and can show that you can attract the right tech builders, I think you can pull it all together. And I think the history of entrepreneurship shows that almost like the founder or the founders between them, if they're able to kind of think out the box enough, you will be able to make your thing investable. I guess at the same time, in the bear market, I think the hurdle you'll be coming up against is this kind of get to $1 million in annual recurring revenue as kind of like some weird VC paradigm that is, I can tell you, really great if you do get there. But the reality is most startups won't, and I think you will still be able to sell the vision. You still will be able to raise millions of dollars of capital if you're able to properly articulate, we're the right team, we're building this product, our market's exciting, and back us, basically. So yeah, obviously, so when you're looking to do that, I think clearly, I mean, this is kind of obvious, but you want to highlight the achievements of the founders. Obvious, but actually quite hard to articulate in one team slide, right? Like something that really gathers like the founders' LinkedIn like credentials and gets it in bullet points and gets almost, think about a lot of VCs may even pass on you before they've even met you, so you don't even get the chance to do the elevator pitch. And so the team slide, I think, is something, if you can really articulate what's special about your group. I know it's something, if they're in the interest of VCs or like smart angels is sparked by your project, getting that team slide nailed down, getting it credible, and getting it kind of showing something, I think can be great. I think the synergy of the members together, I think, is very important. Advisors or mentors can be valuable. I think you'll probably have already found this, that the advisors and mentors are useful and definitely can open the door to your first check quite easily. I think people would prefer those advisors or mentors to actually have invested as well. I think it really depends. In the OrdinalsBot raise, actually, we had a very talented like investment banking contact of mine who opened a lot of our early doors for doing it. It was very interesting. Like, he could walk us into the room with like every single financial institution, every like single group that we might, on like a very weird TradFi dynamic that actually for crypto isn't necessarily what you really want, because but they were very, like, we still raised checks from quite a few of them, and if you have the advisor with the right credibility, that will be great. But if they're rolling up their sleeves, and obviously like the education that an Albert or a Trevor or all the great people in this network can give you, I think there's a lot of value in those people. I think there is more value when they write a check, but not always. So just sort of be aware and try and be cognizant of those people. But it's the advice, talking about the advisors and mentors, I think does add a lot of value. And I think if you're able to showcase investors that people respect as well, that really helps. And then if you have a big network, if you're like super connected anyway, I think that already, like I think I'm certain that the warm intros or that you can get during your fundraise will really turbocharge that. Like I know, and I've had like a very good head of investor relations who like crafted the art of the cold email and like had his sales chutzpah, and he could do it really well and get us in the room with really influential people cold. And that is actually a skill, and some people are very good at it. I think it's often easier if you're doing it from a warm connection, but I guess at the end of the day, those things can be carrot and egg, whatever they are, chicken and egg. Very good. Yeah, and then in terms of the idea you should be putting across, obviously, like really nail the problem you're working on, your solution to it. I think if you can, like one of the ways that you can really stand out is grabbing it in an interesting way, articulating like your elevator pitch in a way that surprises people, and that's much easier said than done. And again, something I've worked with very smart marketers over the years, and like my approach has been much more like try and be sincere, be believable, really focus on the upside, and the problem solution is easiest once you've actually cracked it. So I'm pretty sure a lot of you have been dealing with like the Eric Ries lean startup kind of methodology and all that kind of stuff, and how you figure out what problem you're solving and do the series of sort of rapid iterations tests. I think especially in a bear market, the more proof you have of actually having like tested your alpha with the market, tested your beta with the market, seen how customers use your product, I think that will really, really help you. Obviously, like innovation, differentiation, scalability, I think is absolutely key, right? Like this is, I've met some really, really interesting entrepreneurs over the years, and they've got like halfway along the runway, right? And if they haven't convinced me within 10-20 minutes that their business can get to at least 100 million in revenue in theory, my conclusion is it's not VC investable. And so I don't think that's actually a bad thing. Like there's a lot of great entrepreneurs working on passion projects that can live quite well. Like I dealt with like a network of CFOs that were trying to do like some media company for crypto, and really, really great people. And I think they actually will have quite a nice services business because they're building like this network of CFOs. But as a pure media company, and as they were pitching it to me, like the play for educating CFOs didn't quite work, for example. I mean, that's a weird edge case. But basically, like, but I do think that like, I'm sure many of you need a CFO and need that kind of hardcore number crunching to be able to scale, at least once you're getting some traction. And I just felt they had a really nice services business, but it wasn't necessarily VC backable. So I think really thinking about like how your business kind of goes out there, and the numbers will add up, and it'll either be in a B2B way, like a Salesforce, or a B2C way, like any number you pick, your startup unicorn kind of thing, and getting those numbers to stack up. I'm very conscious that this is like a crypto conversation. So I think there is I've actually tried to strip out a lot of the token and edge case scalability, and I've actually invested in quite a lot of like SAFTs and things like that. But I think it's a weird, it's almost like I think in general, unless you're like the Ethereum Foundation or like the people building a killer protocol and your tech is beyond advanced, like I'd prefer most people to think about how their organization is successful in a pure business way. And then if the token or the NFT or whatever it is, like these kind of crypto native fundraising mechanisms, they can be accelerants, they can be distractions as well. So that's why this talk is very much like, think about your business, think about your organization, think about how you're articulating it. And I think this is very much from like a VC angel investor point of view, and an entrepreneur talking to a VC and angel investor. So really happy to dive into edge cases, and I think as ever, when you try and like give a talk on something, you oversimplify a lot of this. But yeah, and I guess on this scalability point, right? Like know the target market you're going after, know the market size and growth, know your customer needs and pain points, and all of that interlinking thing is almost how you will end up being, like, if you can at least demonstrate really strong understanding of this, I think you will be in a better position than 90% of entrepreneurs. And I know, like I know for a fact that I built businesses where we haven't been like as like we felt we had an understanding of our customer needs and pain points, and were able to sell quite big contracts into them, but then we didn't have the right understanding of how we service that at scale, how we move that, how we move the needle on that in that. So almost like doing the kind of lean startup style target experiments really, like, I guess it can often be quite valuable if you've come from a particular niche. I think like clearly, like in the Web3 Bitcoin world, like if you're trying to build a business in Ordinals, and if you know the degens well and you know what they want, I think that will help you. You know the Bitcoiners as well, that will probably help you, and like, but how like there's a lot of you still need a crystal ball for this, but just I think everyone should be challenging themselves to be as rigorous as possible in how they're thinking about a lot of these things, and then obviously like getting a good mapping of your competitive landscape, like in raising money for OrdinalsBot, for instance, we've been like, we have competitors doing something and there's someone scaling super fast, and they literally come out of left field. We'll know who they are, but when they've emerged, they'll have been often seeming very early, seeming very incompetent, and they suddenly have got something that catches a nerve. So what I think is great about like this Bitcoin innovation market at the moment is it really is like what they call in like venture circles and startup circles, like blue ocean, you know, like you can create new markets and you can service them, and you can do it in a month or two, and you can do pretty well if you articulate that well. So the great thing is just being in this room, you're in the realm to carve out a nice little part of a very interesting niche. So almost like the quicker you can iterate, the quicker you can chuck products into the market, and get market validation, get feedback from customers, build a product that works. I think it's kind of almost like if you go through this entire cycle on the right hand side, and the best entrepreneurs and like entrepreneurial creators can spot that in like, and within a week they've got a product rolling, and they've experimented, and then they're iterating, and it's an art. It obviously helps like having like a crack tech team, but I think any entrepreneur can figure out a way to get there as well. So in terms of the market, yeah, you've got to figure out your unique selling points. You've got to figure out why you. I think a lot of people will be curious about like I think there's a lot of skepticism hardwired into anyone who's been around the tech scene and the investing scene. So really like thinking like almost in every interaction and thinking about yourself, think about like what makes you different, how your organization will do well. Yeah, you've got to think about like your value proposition, how it will go down. And I think a lot of it comes down to that market validation piece, right? Like how the value proposition is actually being received by the market. The market generally will tell you a lot, right? Like I think, and to be fair, this is a Bitcoin startup lab, so I feel fairly confident that this is most of your cases. A lot of what I'm talking about doesn't talk about like the heavy IP world, like the university startup kind of weird, like PhDs dreaming up things. But I don't think that necessarily applies here. But maybe people are thinking about models on that route. But this is very much like trying to think about like your typical scalable tech startup and how you might go about like getting from 0 to 1. As the very good book by Peter Thiel. He's very controversial and not popular for many reasons. He's quite a strange guy, but he's also is quite a brilliant book he wrote on like figuring out like how you make what you're doing exponential. Yeah, and then I think from once you've figured all this stuff out, the roadmap with a good quality team of people, I think, should write itself, and the business model should write itself. I think it is really valuable having if you've got like someone who's good at financial modeling, like iterating, especially if you've got real numbers, if you've done your market valuation and you can extrapolate it, and especially when you're hitting like 10K revenue a month, 20K revenue a month plus, then like chucking those numbers in a business model and figuring out your path. I'm a big believer on. I think the flip side of that is I've raised money. My first ever CFO was very good at making charts go up and to the right, and actually quite useful for raising money. But I realized he wasn't very good at any of the other stuff that like accountants and CFOs should be good at, which is like mapping, like telling you not to spend too much money and all of that. So it's if you get too strong a financial model and you're not able to deliver on it, it can also cause problems because you'll probably burn through a lot of investor capital. Cheery, this is one of my favorite quotes when I was like going through a restructuring. I used to think about this a lot. So in Elon Musk said, running a startup is like chewing glass and staring into the abyss. After a while, you stop staring, but the glass chewing never ends. Yeah, it's not a cheery thought, and it tells you a lot about Elon. But I think it's also helpful to know, like basically anyone who's founded a business, I think, is going through like managing how you meet payroll, like where you go, and Elon obviously did it in a very dramatic way where he decided to like found Tesla and SpaceX at the same time, and having been a very successful businessman in his own right, and I think was nearly out of his last funds in 2008 before making them successful. But I think not everyone is as crazy maverick genius as that, but I think it probably holds true for a lot of businesses in the early stages and the later stages, like basically like you do well, and it's almost like a video game. You get to the next level, and then you're kind of going, well, you're kind of out of your comfort zone and having to figure out where you go. So it's not a cheery thought, and it's only for a certain type of person, I think, like real entrepreneurship, but like it is an amazing experience for anyone, right? Like, and it's kind of something that no one will want to stop doing. So I guess like like the best entrepreneurs are dreamers, and I think like they have to be realist as well, right? But like if you're able to paint a big enough vision and get enough people to believe in it, you will succeed, and you will succeed well. I guess this is something that we've been tracking quite a lot. It's like who is active. This is looking at the 10 biggest crypto VCs in 2018-19, 2020 to 23. So obviously a lot of names in here. FTX Ventures hadn't even really started deploying, which is quite interesting. You've got obviously A16Z, DCG, Pantera, like a lot of these names you'll probably have come across. Some of you may have talked with some of them. And we've been like, I think what's quite an interesting way of looking at the market is to like begin like peeling back the interweb of relationships, right? So when you know people at some of these top 10 firms, probably most of you will never found a startup that gets to be backed by one of these groups, right? Like these are the groups that do the 5 to 10 to 20 rounds. But what we find quite interesting is looking at the kind of web of relationships of all of them, and then I guess what you see is clearly there were groups that invested very, very heavily last year, like FTX, Coinbase, Animoca, DCG. So the funniest thing I find about this graph is obviously FTX, no surprises there. There's nothing by them in this year. DCG also perhaps a bit more surprisingly, but as you probably know, they've had their problems with Grayscale, also run into problems. But you basically what I advocate you to do is kind of try and do as much data mapping as you can of if you think your startup has met a lot of the criteria that we're talking about, is like go wider, try and look at who these people are investing in, and then who around them, right? Like there's probably only 100 to 200 firms at any given time that are really actively in the market. And there's ways to reach them, right? So get the co-investment partners of these firms, and then the other 100 of what they're doing. And then in the I haven't prepared a Bitcoin slide, but like a lot of the Bitcoin focused VCs are pretty interesting. They can be quite conservative, but suddenly for going in this niche, I think they're probably quite easy people to get like a $50K to $1 million check if you're talking to like a Castle Island or whatever. But a lot of them are very early stage. So if you've got your tech working, if you've got your vision working, the Bitcoin focused VCs for this particular cohort are good. But sorry, I didn't do the data. And yeah, we just try and gather as much data as possible on like Pantera, Animoca, whatever, right? Like, and try and understand. And you can obviously like use Crunchbase, use PitchBook, use whatever to try and understand that. But I think, and then you can begin going like how you like get more detail. But there's obviously been trends that have been popular, like NFT. Like I think this might be a bit old in terms of the information. Obviously, like from a market map, US is always good, other than in crypto, problematic, just because obviously the SEC and like the IRS and all of these things that can make it a challenge as well. Europe a bit harder, but very good for finding a crypto friendly market, good crypto entrepreneurs. And then I think Asia, still a lot of capital to go into crypto. I think from a Bitcoin focused perspective as well, it's actually easier building a crypto project in the US as well, because it's the only thing that has clarity that it's a commodity. And so there's a lot of sympathy towards Bitcoin, clearly from some of the leading financial institutions in the US. And we also do a investor focused summit every 6 months. I'm inviting Albert along, but if anyone's interested, I'll send through the presentation, and really happy to take any questions, basically.
Yeah. Yeah, I was just going to ask you, what do you find that with you, the startups that you've had experience with was the most common hurdle they faced near the beginning, if you can think of it?
Yeah. I mean, so many, right?
Sorry.
So I think the biggest thing, first of all, is like having your band of brothers together, right? Like, and going like, we're gonna do this. And it's almost like the transition from solopreneur to like a real team.
Yeah.
That's really, really hard. And I don't know how you square that circle. Like if anyone finds the answer, tell me, right? But the I think as an entrepreneur, you need to get really, really good at convincing very smart technical people to join you on the journey, or find the smart technical people on the journey to be with, right?
Yeah.
So
Makes sense.
so I think it's gelling the team that really cares about a topic, and not fighting over money and fighting over the cut, and like it's all of those crazy like political dynamics that no one no one wants to deal with, right?
Yeah, it's like
human.
Oh, sorry.
Yeah, go ahead.
Oh, I just thought of the Beatles and what's her what's her, why can't I think of her name? She broke up the band, Yoko. Yeah. You can't have a Yoko, I guess.
Yeah, well, exactly. Like, but also the most successful band of all time, and they still were dysfunctional, right? Like
Right.
that's the way I'd look at it. It's kind of and the actually someone pointed out to me on the crypto market, like one of the problems with trading, if you're into like the shit coins, right? Like if you're into deep into Cosmos territory or whatever it is, right? Like and no offense, I think they're probably one of the better, like that area, but you need to kind of almost know like who hates who and why they hate each other, right? Like if you're trading them properly.
I had another question. Sorry, just whenever you're done now. There.
Yeah.
Right.
There's another hand up, but go ahead on that one, and then I'll pick
quick.
up the next question.
Thank you. Yeah, I just want so now if you were to have something extremely breakthrough, is there a special way to go about things when that's the case?
Yeah. So you can like I think once you've got the product working and the like I think that is once you've got something that at least has like almost like you've got the story, you've showcased it, it will work. I think you can really like articulate that to like basically I'd get a funnel of like 40 to 50 investors, have them in a spreadsheet, work them through, and like be really systematic about how warm they are. And it's just classic sales, right? 101, like effectively just go like who's at 50, who's at 500, who's at 1 million. Focus on those who are chasing you, not on who don't ever really try and chase investors. It doesn't work. It's kind of like dating. It's like the way like you've just gotta be cool, and
Okay.
like they'll come. Is kind of a weird psychological game. And so I've had a very interesting period with OrdinalsBot, right? Because I've been like head of strategy and coming in as like the business guy with two very smart technical founders who'd never done a raise. And they're going like, and it was like second nature to me. It's like, okay, well, we did the meeting with that guy, and we'll leave them. It's like, where are we on this process? Why aren't we following up with them? I
Oh,
just typically ignore the people, right? Like, and wait for them to come to you, like, because then at least you know they're interested, right? So,
yeah.
or you can
Thank you.
send them a reminder every week or two to like keep them warm if you just think they're busy people. But like almost like the ones that are warm, you'll know very, very quickly. And then focus time and spend time with them, and also play hard to get with them, and just like, hey, sorry.
Oh, yeah, you cut out there. I didn't say anything, but thank you. Can you guys hear him? I think you cut out at the end there.
Okay,
There you
all
are.
good.
Yeah, you're good.
So we
Thank you so
have
much.
Kemal.
Yep.
Hello,
Very
thank you for your presentation. It was very insightful. Um, I have like a twofold question. Both kind of are about the same topic. So you had mentioned real numbers, and that's kind of equated to what I got from it. It's valued as based on the market validation. Can I base my market validation on like fiat or Web2 metrics, being that the landscape that I'm going into? And then the other part of that question is, what are some of the traits that you look for in an accountant or a CFO in the crypto space versus like the typical startup space?
No, that's really good. So just to clarify on question one, in terms of the metrics, in terms of fiat versus Bitcoin, what was the question exactly? Sorry.
So would I treat like a market cap value the same way in crypto? Uh, the the landscape doesn't exist in crypto just yet, so I would base it. I'm assuming I would base it off of the landscape existing in traditional businesses.
Yeah, I mean, I think infrastructure businesses and different marketplaces and whatever, right? Like there are quite big businesses being built within crypto. And so that is but clearly like we're also talking blue ocean, right? So I think I mean, the way you should be thinking about it is from an investor point of view, like the VCs, if you're talking about VC money, and maybe there's a whole other debate here, but VCs and your angels are typically looking for you to be something that has the potential to be a 10 to 100x investment, that will return a lot of the other bets that they have done, right? Like the model is basically like make 20 investments and one investment returns the whole fund. That's like your VC who's investing like $50 to $5 million checks. That's almost how they're thinking about like their portfolio math. So the business needs to be such that you can articulate how, if you get everything right, you're gonna skate towards like a 50, 100 million valuation plus. And it's a really hard mindset to get into, and it's actually not totally healthy. But I do think it's worth being aware, if you're a founder, that is kind of like the dream of the VC is they're backing you because they think that you're the kind of person who can raise a $50 million plus business. And I think the good thing is, in the crypto world, it's very exponential. So getting there is quite easy as well. Then moving back to the CFO style, yeah, those kind of people, and you're going to need that like once you get beyond pre-seed and get to like seed. Like I think a lot of people, once you're raising like several $1 million, those kind of people are pretty helpful, because like once you get your business in a, you kind of want to be able to audit it in a bulletproof way, to like, especially post FTX, post Luna, post whatever, right? I think there's a lot of skepticism about people's numbers in crypto. So they can be valuable, but like you almost want like the kind of people who can be an open-minded CFO, which is like when you find them, tell me, basically. Right.
Yeah. All right. Thank you so much.
Yeah.
Hi, Toby. It's nice to have a really experienced CEO here, and I would like to ask a simple question: that what is the hardest thing you have experienced in the OrdinalsBot while you are raising money or just operating the OrdinalsBot? What is the hardest thing you have ever experienced during this period?
Yeah, so it's been a crazy ride at the moment, right? Like literally, we had a DDoS attack. That was probably the hardest thing, because we literally had to, a team of 2 engineers had built the platform. It's been quite popular, and yeah, we had an edge case, hadn't quite got our systems in place, because it was like it was a 3-month-old startup, but it was quite popular. And so that was definitely the hardest. So getting like one thing is, once you get traction, always have in the back of your mind how you like put in the processes to protect yourselves. But that's also really hard as well. Like I think we pretty much fixed it by firing up Cloudflare, putting in place some best practices, that kind of thing. But we had like 2 to 3 weeks of absolute hell with people invading our Discord, and that was pretty hard. And then we were in the middle of the raise as well, so we were nervous that the entire raise would collapse, or there was a more fundamental problem, and then we had to engineer our way around it. So I think the thing to bear in mind in the startup space, in the crypto startup space, you need like really strong security and good best practices, and you don't have the money to spend on that. So it's which is why you're raising investor capital and doing all those kind of things. So and you just need and then after that, like I just spent my next few weeks hiring like Bitcoin devs. I was like literally interviewed 50 Bitcoin devs and got 2 really strong ones. But it's kind of balancing like how you're dealing with the product and the market and the investors and the clients and your own internal functioning. None of that's easy, basically. So.
Okay, so speaking of raising money here, we do know that there is a crazy month for ordinals, which BRC20 and other projects brings ordinal super crazy, but it's not going increasingly like that again recently.
Yeah.
So do you think it will change the situation we are facing when, you know, maybe a month before it was the fund is really crazy about ordinals and Bitcoin, but it's getting a little bit cold today. So do you think the situation will change rapidly? We are facing totally different situation this month.
Yeah, no, really good point. Like my basic view is that's the nature of markets, right? I think the it was, May was a really good fun in the ordinal space, but like I can tell you I was diligencing like BRC20 and like buying ordinals NFTs randomly and whatever, and they go up like 2x a day in value in my wallet, right? And I'm relatively experienced at trading, so I was like trying to harvest as much of that as possible. But at the same time, that was totally unsustainable, you know, like that was so the way I think about it is like the waves, and I'm of the conviction that you'll see another even bigger wave upwards in ordinals. But maybe you don't. Maybe it ends up being like this little niche business of stuff being building on Bitcoin. But I tend to be very skeptical about that, because I think once you've got like a popular growth trend, it will typically kind of have these mini flare-ups and lulls, right? Like I remember probably quite a few people in the school like remember crypto kitties, right? When crypto kitties came out, there was like this massive spike, and then the NFT market went down for ages after it tanked Ethereum, right? Like for years. And so like I think the reality is like you've just got to be patient and build stuff and think adjacently and think about like how everything interlinks, basically.
Yeah, thank you. That's all my questions. Thanks for the answer.
Cool.
Hi, Toby.
Okay, let's we have another speaker coming up in 4 minutes, so just doing a quick time check. These are great questions. Cool. Rafa, please be quick about this.
Awesome. It's excellent to meet you. Thank you so much for the presentation. It's golden nuggets after golden nuggets. I had several questions. I'm just going to do one. You just briefly mentioned university-like startup. So we're facing really a blue ocean in front of us, and we're still looking at, you know, how to put pieces together to actually apply and create these new use cases. And yeah, the question is around university-like startup, and how applicable it is. You know, can you expand a little bit your thinking around this?
Okay, yeah, it's very much like your IP university spin out, the ones I've seen experimented on in the crypto space are like GitHubs for scientists or whatever, right? But I have no idea. All I was just saying is like these are like thinking about a scalable tech startup. There are businesses like the edge case, I think, is most where there's kind of like businesses with hardcore IP that people have been working in like Cambridge or Oxford or whatever it is, right? But it's just not my area of the venture world. So I know those people. I think they're very smart, but it's just a very like those projects aren't looking for. They aren't reading Eric Ries and like looking for product market fit in like a month. You know what I mean?
Would you say there's still some VCs that are interested to invest, and how much like a hustler or somebody who's able to actually piece the things together in such a startup is needed?
Hard to tell. Again, it's not really my domain, but like I think you definitely need those people and like your local university and those people, like they all have like tech transfer people and like Google came out of Stanford, right? So I think there's a revolving door, and it was just more like I was thinking of like the people who designed like some of the COVID vaccines or whatever, you know, I don't know. But anyway, but maybe take another question as that.
Thank you.
Or if we've got time.
Yeah, we got time for one last one if Shakira is quick about it.
Yeah,
And then we're
hello,
gonna take a
Toby.
group picture.
Yeah.
Yeah, thank you so much for the presentation. I have a quick question. So from your own experience, can you please share maybe an insight or a lesson learned from the startups that didn't succeed? Like, is there a common pattern that leads to failure that we need to pay attention to?
Yeah. I think so one of the things that weirdly, like, yeah, really good question, I agree. It's weirdly like one of the reasons why I put up that Elon Musk quote on chewing glass, right? Like actually the reality is you probably won't succeed the first time out. It's like going, you're like if you're an amazing and incredibly lucky person, you will. But almost like the traits of entrepreneurship, like if you read like I think what in answer to that, I'd say like there's a very good book by Ben Horowitz called The Hard Truth About Hard Things. That's a good book to read about like almost like it. And so I think it's almost like if you're not resilient enough and you don't stick at it enough, then you won't succeed. But then also like being able to realize when you're driving into a brick wall is also very, very important, right? Like, so it's that balance, and there's no easy answer, right? What's helped me is reading a lot about this stuff, right? Like, so there's a very good book on the early days of Twitter, and probably quite a few of you know that this started as like a podcasting company that completely ran out of money. And then Twitter ended up being a pivot of this podcasting company, and obviously is an iconic business that obviously has some issues, but so like what I'd say is be persistent, but also learn to know when you're wrong.
Thanks a million.
Cool.